Hello everyone, we're going to get right to it here today and walk you through three of the most important topics happening right now in the real estate market. We're going to be going over mortgage rate projections from the experts, we're going to talk about home prices, and we're going to wrap up on affordability, something that's definitely top of mind for almost everyone right now. My name is Corey Harter. I'm with the Homes by Chris Harter real estate team in eXp Realty. We're here to help you in all aspects of real estate. We're not only real estate agents in Iowa and Nebraska, but we're also investors. We want to help you with all your real estate needs. So I'm going to begin today with mortgage rate projections from the experts. And we all probably can agree that this year in the housing market has truly defined by rising mortgage rates. This is a look at the Freddie Mac 30-year rate going all the way back to January of 2022. And if you follow along with us here, you've seen this before, but what it shows is how much mortgage rates really rose from the beginning of the year all the way into the mid to late June-ish time frame and since then. You can see that there's a lot of volatility or fluctuation in the mortgage rates over the past few months. So why is that? It's because inflation is the enemy of long-term interest rates. And that's certainly something that we are following right now. And we know that the Federal Reserve doesn't call the mortgage rates or determine what the mortgage rates are, but they're certainly making moves right now to ease inflation. When that happens, mortgage rates tend to respond. So, watching all the different economic factors that impact mortgage rates and how that's playing out over time, it's certainly something we're keeping our eyes on. And one thing that we can do in the meantime is we can turn to the experts to say, what are the projections for going forward? Everyone wants to know, where are mortgage rates headed? Well, if we look at these projections from Freddie Mac, Fannie Mae, the MBA, and NAR, these are the latest data that we have as of August of this year. And if we average all their projections together over the next 4 quarters, what we see, or what we can see over in the right-hand column there, is that mortgage rates are projected to essentially stabilize over the next year. So we are really looking at this, trying to figure out what's going to happen with mortgage rates. This is a great place to look for information. It may be a nod to the experts feeling that the Federal Reserve is going to get inflation under control. If that's the case, then mortgage rates should stabilize at this point. That's certainly what we're looking forward to, and hope the experts are correct in these projections as we continue to watch all of the economic drivers around us. And as I think, as we look at this, so low to mid 5s is the projection, maybe even next year at this time dipping into the high 4% range. That could bring a lot of predictability for buyers. And I think that's, this next quote really says that well. This is from Lisa Servant, the housing market economist that we follow, and she says that after the end of the summer lull, and as mortgage rates stabilize, we may see a return of buyers and a relatively strong fall housing market. So that could be great news. If the mortgage rates do stabilize, we may see more buyers coming back into the market. And we certainly know that rising mortgage rates have caused many buyers to step out of the home buying or selling process currently. But with these projections at hand, we could see stabilization in a very strong fall housing market. Certainly something we're keeping our eyes on, and we're watching too, see what the experts say as well. So another topic that's on everyone's mind is home price appreciation. So there's a study that surveyed 400 agents over the past month, and they asked these agents, what is the #1 question that your buyers and sellers are asking right now? And that #1 on the list was, what's happening with home prices? So where are home prices headed? So let's break down today's home price appreciation, because this is a really complicated topic, and I'm going to do my best to explain it, because what we're hearing right now is home prices are appreciating, but we're talking about deceleration. And then we're seeing in some markets, sellers bringing their list prices down. There's a lot of confusion, a lot of different information out there, and I want to do my best to try to share this with you. So what we're going to start with is a quote from Mark Zandi. He is the chief economist at Moody's Analytics, and he says, I don't think national housing prices will decline in a meaningful way, but there will be some price declines across the country. So what does this mean? Nationally, we project that home prices will continue to rise. We're seeing that in expert projections, but at the same time, we also know that there are some overheated markets still throughout the country, especially on the West Coast, where there are likely to be price declines moving forward. Let's bring context to this and show how home price appreciation is still expected going forward based on today's buyer demand and low inventory. But what does that mean in the grand scheme of things? And I think this chart here, this graph, really helps to articulate this. This says depreciation is slowing, not depreciating. And that's where deceleration comes into play. So let me walk you through this. This is percent year over year of home price increases for 2022. So far, this is data from CoreLogic, latest data that was just released. And what you can see here is that year over year, January, February, March, home prices were still accelerating at a pretty rapid pace. Record-breaking home appreciation at the beginning of this year. But what has happened since then? We've come off that high of 20% year over year home appreciation, and that's starting to cool. And that's what you can see here in May, June, July. That's the deceleration in prices. So what this means is year over year, July, let's say July of this year compared to So, home price appreciation is slowing, not depreciating on an annual basis. This quote from CoreLogic really helps to articulate that. It says annual home price growth slowed for the third consecutive month in July, but remained historically elevated at 15.8%. That's the graph that we just showed you. As 30-year fixed rate mortgages neared 6% this summer, some prospective home buyers pulled back, helping ease overheated and unsustainable price growth. We know the past 2 years have been an anomaly. The price growth over the past year was unsustainable price growth. Look ahead, CoreLogic expects to see a more balanced housing market with year-over-year appreciation slowing to 3.8% by July of 2023. So, by July of next year, CoreLogic is projecting that homes will still be appreciating in value, but at a much slower pace. That's the deceleration continuing, and this is much more in line to what we're seeing from home price expectations, the surveys, and what they're saying for continued price growth. Higher this year, a little bit more towards a normal range next year and beyond. Leading up to the pandemic, the average or typical home price appreciation over a typical year was about 3.8%. So that's what experts are starting to see as they look forward. However, what I also wanted to talk you through is that many experts raise their home price forecast for this year. So this is very typical. What you can see here These are January forecasts for 2022 home price appreciation. That's what you see in the middle column, compared to the latest forecasts, and those are in the right-hand column. So what usually happens is, as you start a calendar year, is the experts project out what do we think home price appreciation is going to be this year. They're looking at buyer demand, they're looking at supply, inventory, all of those different things that drive home price growth, and they project out for the year. Well, as the year goes by, experts tend to reforecast based on what's actually happening in the market. And so what you can see here is that this year, experts, even though prices were decelerating, reprojected a higher home price appreciation for 2022, and that's what you see here. So we're hearing all these different terms. We're seeing these home price forecasts. Trying to make sense of it all is very confusing, to say the least. But what experts really saw at the beginning of the year was that we probably were going to see more inventory coming into the market. Mortgage rates haven't risen as much as they had to soften buyer demand, and so as the year progressed and they realized inventory is still pretty low, buyer demand is softening. What's going to happen here? They reforecast up, and that's what the green column is showing you from each of those experts. So what does this look like for 2022? So we bring this graph to you to show you the latest home price projections for the year. And the average of all 7 forecasts that we follow is showing 11.3% annual appreciation for 2022. Now, what we have to remember is that the majority of that home price appreciation happened earlier this year. It happened at the beginning of the year, and we're seeing that softening, but experts still projecting by the end of the year 11.3% home price appreciation for 2022. So why is that? Well, that's because inventory is still historically low, and if we look at this data from calculated risk, this helps us compare where we are today versus where we were over the past few years. So if you look at the blue bar on the left, you can see that inventory is 26.3% higher than it was the week ending September 2nd of last year. So year over year comparison for the last week of August and into the first couple days of September, 26.3% more inventory. So that is creating more opportunities for buyers. It's helped with the softening of home prices for sure in that area. But compared to the same week in 2020, inventory is still down 5.4% compared to 2019, prior to the pandemic. Inventory is still historically low, down 42.2% from where we were that same week in 2019. So that's what's continuing to drive upward pressure on home prices. Inventory is still low. We still have buyers in the market. And yes, we've seen a softening, we've seen a cooling, a slowing, but home prices are projected to continue to rise, primarily based on this inventory data as well. So what's happening with home prices? Anytime we're talking about mortgage rates and prices, we know that impacts affordability as well. So let's talk a minute about affordability. This is a topic I think that comes up in a lot of cases, mainly right now in the media, people saying, are homes even affordable right now? And I want to break down affordability from a couple of different angles and give you a look at that. So if we start here, let's start with the first place, the Housing Affordability Index that NAR releases. They release that every month. This is a look at housing affordability right now is lower than it's been going all the way back to the early 90s. This is a look going back to 1990 and housing affordability. The way you read this is the higher the bar is, the more affordable a home is. And right now, you see the red bar below the years that we showed here going all the way back to the 90s. And what stands out are the years after the housing crisis where distressed properties dominated the market. The high of the market, the Housing Affordability Index read 197. Right now, we're at 98.5. The way you read this is 100, a 100 reading of the Housing Affordability Index is really an even reading. That means the average individual, the average household in this country can afford 100% of the average mortgage payment. You make enough money to afford an average home, and that is affordability. and we've gotten a lot of cover from interest rates over the last several years and seen great affordability. And right now, the average household can only afford 98.5% of the average mortgage payment, so less affordable. You could maybe even say unaffordable, really, the way it's going. You may see that some places, and that's where that comes from, but certainly an apocalyptic scenario by any means in the housing affordability. That's really based upon three things. It's based on the prices of homes, it's based on interest rates, and it's based on wages. That's how they come up with that housing affordability index. What do you believe about prices, interest rates, and wages in this country? If we continue on this, NAR came out with a very interesting point about mortgage payments. Compared to 1 year ago, the monthly mortgage payment rose to $1,944 from $1,265. So that's an increase of 53.7%. So homes are less affordable right now, and mortgage payments have been increasing. If you look at this graphically, this is what this looks like going all the way back to the last reading of June. That is the most recent information that we have in the statement that I just gave you from NAR. Now, no doubt, as people have gone through the pandemic, the meaning of home changed, and they've said, you know what, we're willing to pay for what we want, and we're seeing that right now in rising mortgage payments across the country. Another thing that we want to look at when we start to break down affordability and understand that is, we want to look at what is the average mortgage payment or income committed to a mortgage payment. And right now, that sits at 25.4%. That assumes a 30-year fixed mortgage rate with 20% down payment on a medium-priced home with medium income. So let's go back to the affordability question. The median income, the median-priced home, somebody is dedicating 25.4% of their income to a housing payment. Why is that important? Well, if you look at this 25%, it's typically what is recommended. We're slightly above that. As you think about housing, one of the greatest benefits of buying a home versus renting is you benefit from a refinance as rates dip in certain times. And I'm certainly not suggesting that somebody should buy a home based on just the opportunity to refinance. But it is something that we want to remind people of, that you can buy now as prices rise, which is certainly what is projected. And if there's an opportunity to refinance, you can do that down the road. That's very, very important for those that own homes. So this is all about incomes and qualifying incomes and looking at what people are making, what the price of a home is, and certainly what the interest rate is. And that helps us break that down. If we could look further and break this down further, if you look at median household income versus qualifying income, here's what becomes very, very clear, is that this is not the same across the country. What you need to make to buy a home in the West certainly is significantly higher than what the median income is. If you read this, in the West, homes are less affordable. In the South, they're neck and neck. The Midwest, median income is higher than the qualifying income. And if you look at this graphic here in the U.S., sort of neck and neck. In the medium income, $91,952 versus qualifying income needed, $93,312. So certainly seeing the rise in interest rates lessen the buying power of consumers relative to housing across the country. So what can you do like in a scenario like this? Now I want to wrap up with a couple things and give you a couple of resources and what you can use. Here are three things you can do right now when looking for a home. Maybe you're struggling with affordability first. You can expand your search area and criteria. Somebody that maybe was looking at buying a home near the city center or in the town maybe needs to look a little further out or look to where things might be more affordable than the area that was for their first choice. So that's one thing you can do. Second thing you could do is look at alternative financing options. It's critically important to explore alternative financing options. You shouldn't really go out and buy something with the intent of refinancing, like we just said, not at all, but understanding what's important to you and how do you structure that debt. What the options are out there that may help you do that more affordably, basically. And then third thing you can do, you can look for grants in the area. Gift funds, sources that are available are like, if you can look at downpaymentresources.com, great organization that you can go in there and say, what are the down payment resources? What are the resources that are available in my community for those that are looking to buy? And those are arranged several different ways, but a lot of times think about a first-time home buyer down payment, a credit or grant or something like that. But look for those options. Look for gift funds. Are there areas where people can use gift funds to get into a home and combat rising affordability? So I think there are things you can do. And I'll wrap with this. Allie Wolf from Zonda said, we're in a place where strategy discussions and planning are critically important to make sure we can thrive during these challenging times. Stay nimble, stay informed, and remember, housing is traditionally one of the first sectors to slow as the economy shifts, but it's also one of the first to rebound. We've done a lot of work on recession, and those topics continue to come up as we see the country slowing. But staying nimble, staying informed is key. I hope you found all this information useful. One thing is for sure is change. We're going to see that continually throughout our lives. Reach out to us if you have additional questions, whether it be selling, buying, investing in real estate. We're here to help you. You can visit our website at homesbychrisharter.com. You can call or text to set up a time to talk or meet. We'd love to meet you. Phone number is here, 402-378-9462. We truly believe that every family should feel confident when buying and selling a home. Have a wonderful day, and we look forward to meeting you soon.